Hello everyone, George DeSantis here with the look at the market for the week ending Friday, June 14, 2019. And as usual, we'll just bring up a disclaimer, urge you to read it, pay attention to the fact that I'm not an investment advisor, and therefore this is purely for educational purposes. I do it for my own purposes and share it on YouTube if anybody cares to look at it. So we'll start as usual with a weekly chart of the S&P to get a general picture of where the market stands, perhaps where it may be going in the near future. So here's a weekly chart of the S&P 500. And the first thing I usually do is look at the moving averages. We use a 4 exponential, a 9 exponential, and a 30 weighted moving average. We have a 50-day moving average here. In this case, it would be a 50-week. And there's a 200-day right here. So what we notice here is that if I blow it up a little bit, notice that the 4 is just crossing over the 9 now, which is the red line. The 4 is a yellow line and 9 is the red line. And both of these are above the 30 weighted moving average, and that is above the 50. So insofar as moving averages are concerned, we have the definition of an uptrend here. Taking a look at the price bars, you can see that, as I mentioned a week ago, this bar here is a bullish engulfing bar. We can expect further upside if this holds true, and it usually does. Bullish engulfing candlestick. The body of this candle totally engulfs the body of this candle. Last week we had a doji. What happened is the price moved up a bit. It was pretty much flat for the week. Moved up, hit the one standard deviation, that red dotted line on the Bollinger Bands, and we had this doji type uncertainty looking bar. Okay. Now the other thing we can notice here is that the parabolic with the new parameters that I use, these here, switched to below the most recent bars, so it became bullish here, and likewise it followed up with last week being bullish. The other thing that I notice on this chart is that the Bollinger Bands are basically going into a bit of a squeeze. You could see these bands getting narrower, and usually, as I mentioned in the past, usually these squeezes get resolved with a more significant move, a more dramatic move, either up or down. The problem is we don't determine what direction it's going to move into based on the squeeze. We have to wait to see how that develops. But because we can see some other indicators pointing to bullishness here, parabolic, bullish engulfing candle, etc., and we still have room at the top because we're just hitting one standard deviation, and usually we don't see much of a pullback until we get close to 2 or even 3. So I would say it still looks pretty bullish. And then again, when we look at the MACD histogram, we can see that histogram is now trending up a bit from below the zero line. Williams percentile, the 30 period that I use, since it crossed over here and became bullish, in other words, it has remained above that magenta line, which is sort of a line in the sand for me. The sum of the rate of change indicator has once again flipped above the 4% line. That's bullish. And the RSI 12 indicator, which especially on a weekly chart, is very indicative of an uptrend when it's above 40%, that yellow line. So since it crossed above here, right here, it's remained above the 40% line, and usually market is in an uptrend when that's the case. So weekly chart looking pretty good. It's in an uptrend. Let's take a look at the daily chart. On this daily chart of the S&P 500, what we can see here is that the 4 exponential moving average, yellow line above the 9, the red line, and that's above the 30 weighted moving average. So insofar as the moving averages are concerned, we still have an uptrend here, began somewhere back here, you might say, back here. Now what happened since we turned bullish here is that price moved and hit the 2 standard deviation line, and that resulted in a pullback, a consolidation of this nice move here. It's going through a consolidation period, and so we're now back to the 1 standard deviation line, and that really sets us up for another move to the upside. And if we have a squeeze on the weekly chart, and we might resolve that then to the upside based on what we are seeing here. The parabolic is still below the most recent bar, so it's still indicating uptrend on the daily chart. What else? Okay, if we go down to MACD, we can see that on the daily chart, MACD has been in positive territory now for about 6 or 7 trading days. Williams percentile crossed above the magenta line here at this level here, and it's remaining that it remains there. The sum of the rate of change indicator is hovering around the 4% line. So anytime now we might expect it to cross above if we are bullish, and that would indicate more bullishness. The RSI 12 line, although it's not as indicative of trend on the daily chart as it is on the weekly chart, is continuing to remain above the 60% line. So in summary, both the daily and the weekly charts are looking pretty bullish here. Now, mind you, this is purely from what we see on the charts, technical charts, okay? It doesn't account for any macroeconomic news or tweets or tariff events or anything like that. We assume that it's all built into the price bars and the charts, but it does not account for extraneous events, exogenous events like that. Let's go on. Here's a chart with the Ishimoku cloud. Again, you can read about it on the internet. I'm sure there are a lot of articles on the Ishimoku cloud, but the thing to notice here is that this is a weekly chart, and it broke above the cloud here, which is bullish, pulled back to find support at the cloud, at the upper band of the cloud, and with this bullish candle as we saw before, and so now we are trending up above the cloud. That's bullish. Here's another interesting chart that I haven't shown you before, I think maybe once. Some of you may be familiar with Jake Bernstein. He's a long-time trader, and he uses this kind of a chart sometimes to do some day trading. But in any case, this is a weekly chart. He plots a 10-week in this case, moving average of the highs and an 8-week moving average of the lows. That's the red line and the yellow line. And he also plots Larry Williams advanced decline line with an exponential moving average of 57. And you basically want to be holding or buying stocks when the advanced decline line is above the exponential moving average, the 57-day, 57-week in this case. That's a yellow line. We can see right now it's above that. So Jake Bernstein's chart here is showing us that we have an uptrend. Just want to mention that to you. So we'll take a look at some individual stocks using Shaken Analytics. Some of you may be wondering, why is George using Shaken Analytics now? I love it because when I use TC2000, I'm basically only looking at the technical charts, technical indications. On Shaken, they are taking into account fundamentals and technicals. So for example, the Shaken Power Gauge is based on both fundamentals and technicals. I like that. Okay, so let's take a look at some stocks here that I screened for on the NASDAQ 100. Now, some of these stocks, you'll see that most of them are bullish, a few neutrals, but you have Cadence Designs, which is one that I still own. Microsoft, you can see it pull back here to the long-term average, and it trended up and hit that overbought line, pull back a little, but it's still very bullish. Microsoft, of course, I still have that one. It's become a little overbought here now. It's overbought, so don't be surprised to see a little pullback. I also sold some covered calls on it. But look at these indications, all here very bullish, okay? All very bullish. And the money flow is pretty good. Okay, this one I also own, Synopsys, got overbought. Many of these stocks became overbought with the rest of the market, as we saw in the S&P. And right now you could see that it's overbought here, but the other indications are pretty good, except money flow pulled back quite a bit. Celgene, I don't particularly like the way this chart looks. This stock is pretty much in a trading range, so I'll bypass that one. Let's look at Comcast. Comcast became overbought, pulled back to the long-term average, relative strength buy alert, relative strength breakout. So, and it was oversold, so this one looks interesting. Was up 1.5% on Friday. Paycar, which is auto trucks and tires. It's a company that makes all sorts of automobile parts and so on. That one has bounced off of the long-term average and is now sitting at the 21-day average. Money flow fell off a bit and it's now overbought, so I would probably wait a little bit for that. PayPal I still own and I love it. And I could see that that's a beautiful looking trend. I like that one. I still own it. So let's take a look at a few other screens, because the other ones here are negative, are either bullish or neutral, and I like to go to another screen. Okay, last week I made up a screen, not a screen, but a list of the top 3 stocks rated very bullish, especially, or bullish, in each one of these screens that were done on June 9th. I haven't had the time to do an update on it. In any case, you could take a look at these stocks here that were rated very highly. Now, many of these stocks became overbought. They since a week ago they went up, but they became overbought now. See, so Cadence Design, you can see it's overbought here, overbought here. CMI, Cummings, overbought here at least. So you might want to wait. We might want to wait for these stocks to pull back a bit. You see another one here. See, this is a real estate company. EPAM, I think it's a software company. Yeah. All of these had nice run up since last week, many of them, and they remain overbought. So I would probably, this one is one interesting one to look at because it's not quite overbought yet, and it might have a ways to go from the 21-day average. T. Rowe Price, TROW, that's in a trading range. I'm not so excited about it. Applied Materials also in sort of a trading range here. It's overbought, so I wouldn't be too interested here. And this FleetCor business, this one looks interesting, but it was oversold. See, when we first listed it, and it made a nice move last week. Okay, I think that's about it for this week. I'm going to take a look at the Women's Gold Cup soccer game, which I love. You know, I used to play soccer. So enjoy the game. United States has a great team. And I'll be back next week to do a similar thing.